Most Americans have no idea how brutally credit card companies judge them the second they hit submit on an application. One wrong move with your credit score, and you're stuck paying 29% interest, while the guy with 780 gets 0% intro APR and a $50,000 limit. You walk into a bank or apply online, and one day you're treated like a VIP with the best offers, low rates, and huge limits. The next day, you're getting denied left and right, hit with 29% APR, and offered only secured cards with high fees. What changed? Nothing about you as a person, except one number: your credit score. Credit card companies don't see you as a human being. They see a risk number. And that number decides everything: whether you get approved, what interest rate you pay, how big your limit is, and even which cards they'll throw at you. Level 1. Deep Subprime, below 580. The Rejection Zone. If your FICO score is below 580, credit card companies see you as high risk. Most major issuers will auto-deny you for almost everything. You're left with secured cards like OpenSky Plus or Capital One Platinum Secured. You have to put down your own money as a deposit just to get a card. Approval is easier because there's no real risk for them, but expect high APRs around 28 to 30%, tiny limits, and almost no rewards. Some subprime unsecured options exist, like Credit One or Mission Lane, but they come with high annual fees and terrible terms. Companies treat you like a liability. They make money from your mistakes, late fees, high interest, and over-limit charges. Brutal truth? At this level, the system is designed to keep you paying more. One late payment can drop your score even further. Your only goal here is survival. Pay on time, keep utilization under 30%, and start rebuilding. Many people stay stuck here for years because they don't treat it as a temporary phase. Level 2. Subprime Fair Credit, 580 to 669. The struggle phase. You're starting to get some options, but companies still see you as risky. Approval rates are low for good cards. Expect offers for basic unsecured cards like Capital One Quicksilver One, Pedal 2, or Upgrade Cash Rewards. You'll get approved more often, but with high APRs, 24 to 29%, low limits, $300 to $1,000 usually, and small rewards, 1 to 1.5% cash back at best. Premium cards? Forget it. Chase, Amex, and most big banks will deny you. Some issuers like Discover or Capital One might give you a chance with starter cards. They treat you as maybe reliable, better than deep subprime, but still watched closely. One missed payment and you're back down. This is where many people get trapped in high-fee cycles. The key is consistency. Pay every bill on time. Keep balances low. In 6 to 12 months, you can push into the next tier. Level 3. Good Credit, 670 to 739. The door opens. Now things start getting interesting. You're in prime territory. Companies begin treating you like a real customer instead of a risk. You can get solid everyday cards. Wells Fargo Active Cash, 2% flat. Chase Freedom Unlimited, Capital One Saver One. Approval odds jump significantly. Limits get better, $2,000 to $10,000 plus. APRs drop to 21 to 24%. You start seeing real rewards and some travel cards, but premium cards like Sapphire Reserve or Amex Platinum are still tough. Issuers treat you well enough to keep you spending, but not well enough to give you the best deals. This is the most dangerous level because you feel successful, but you're still paying more than you should. Many people get comfortable here and stop improving. Don't. Push harder. Level 4. Very good credit. 740 to 799. The sweet spot. This is where credit card companies start respecting you. Approval rates for premium cards open up. You can get Chase Sapphire Preferred, Amex Gold, Capital One Venture X. Limits go higher. APRs drop to around 19 to 22%. Sign-up bonuses become realistic. Companies treat you as low risk but not yet elite. You'll get better offers, pre-approvals, and occasional limit increases. This is the level where smart people build serious wealth through rewards and points. But beware, one big spending spree with high utilization can knock you back. Companies watch utilization closely at this tier. Level 5. Exceptional credit, 800 plus. The VIP treatment. At 800 and above, you're in the top tier. Credit card companies roll out the red carpet. You get near automatic approval for almost everything. Amex Platinum, Chase Sapphire Reserve, high-limit business cards. Lowest possible APRs, 17 to 20%. Massive limits, $20,000 to $100,000 plus. Biggest sign-up bonuses and priority customer service. Some issuers even give you better retention offers and higher limits without asking. You're no longer just a customer. You're a profitable, low-risk asset they want to keep happy. But here's the catch most people miss. Even at 800 plus, carrying a balance or maxing cards will hurt you. The best players at this level never pay interest. They use cards as tools, not loans. How to move up levels fast. The real strategy. Credit card companies don't care about your excuses. They care about your behavior. Payment history is 35% of your score. Utilization is 30%. Length of history, new credit, and mix of credit make up the rest. To climb fast, pay every single bill on time. Keep utilization under 10% if possible. Don't open too many cards at once. Build a mix of credit types. Dispute errors aggressively. Most people stay stuck because they treat symptoms instead of the system. Stop chasing cards. Start building the score that forces companies to treat you better. Final truth. Credit card companies aren't your friends. They're businesses. They treat you based on how much risk and profit you represent. The higher your score, the better they treat you. The lower it is, the more they squeeze you. Your move today is simple. Check your score. Pick the right card for your current level. Use it responsibly. Climb to the next tier. Repeat. Drop your current credit score in the comments. I'll tell you exactly where you stand and what card to go for next. This is how you stop being treated like a number and start making the system work for you. See you in the next one.